What I'm saying is that you add all the totals for payments, okay? So this is
Mm.
payment, the total for payment. You add everything. This is what you get, 3,060. Then you know
Mm-hmm.
the total for receipts, which is 4,000. The receipt is just 4,000. They gave us 4,000 to spend. Okay. So we
Mm.
have to subtract the payment from the receipt. The remaining, which is the 480, that's
Mm-hmm.
the remaining amount, will be written on the 31st as our balance carried out. It means that this is the remaining
It's
balance.
940. The remaining is 940.
Yes, the remaining is 940. So the remaining, that's the difference between the 4,000 and the 3,060, becomes the closing balance. Now, in accounting, when we are balancing it, we make sure that both sides are equal. So the difference will be borrowed to top up the smaller amounts.
Okay.
Okay, you see this side is 3,060. This side is 4,000. It is lacking 940 to be 4,000. So
Mm-hmm.
that's 940. That's the difference. That's the remaining receipts. They gave you 4,000 to spend. You spend 3,060. So it means that you have 940 to spend. So that 940 that is remaining would be would be a balance, but we would add it to the 3,060 so that we get 4,000, 4,000 both sides. You see, when we are balancing, we want to make sure that the debit and the credit are equal.
Okay.
So that's it here, so that we can close both sides. Then this carry down. Now we are seeing that every carry down should have a corresponding drawdown because of what? The going concern concept. This concept states that the business will continue to exist for a foreseeable future. So since there is a closing balance, we don't spend it. We take it to the next year. That's we take it to the next month in this question. Okay. So the
Mm-hmm.
August balance of 940 will be taken to September as a receipt. So September they will start with 940 on the first. Then they will take a top up of 3,060 because the cash float was 4,000. They maintain a cash float until it is increased. So the original cash float is 4,000. So they don't increase it again. Please, you understand?
So
Yes.
the balance brought forward is 1st September.
Yes, please.
Mm.
Okay. And then I can see the same first, we have cash float, if I'm seeing it right, of 3,060. Is that right?
Yes, please. Cash float. Let me write it.
Okay. So they are topping the 940 up to make it the 4,000.
Yes. Because I
So
said
what
that
it means is
they
that
have to be
what it means is
reimbursed.
that yeah. So what it means is that depending on the company's policy, maybe 4,000 has been allocated every single month for petty cash.
Yes. It could
Once the
be
month ended,
yes.
it could be
But
more, but
all
I'm
the
saying that
amount,
depending on the
Mr. Douglas, all the amount could be
yes,
expended even before the month ends. And when that happens, they would have to still go for a top up. It is
cash
not just
flows.
for a month, but as and when it
Okay,
gets finished or it gets to the minimum.
okay,
Please, you understand?
yes, please.
Yeah. So can we move to the next question?
So it is done. I mean, that is the end.
Yes, yes.
Okay.
Okay, so in with bank reconciliation statements, first of all, I believe you know what a bank is, right?
Yes.
A bank. Please, what is a bank?
The bank is where we keep our monies.
Mhm. So you save your money in a bank, right? And some people too borrow from the bank. You know that, right?
Yes.
Good. So a bank is not just a place you save your money. Now, a bank is a financial intermediary. When we say it's like, you know what an intermediary is? An intermediary is, right? So an intermediary is like something that exists between two different things or two or more things. Okay. Now, its function is just to take money from savers of funds and give it to borrowers of funds. That's what banks do. They take money from savers, they rechannel it to the borrowers at a fee, which is mostly an interest rate. So then the bank will give the savers some. So they will take maybe 28% from the borrowers, they will give a savers like 8%, and they will keep 20% as profit. Please you understand?
Yes.
So that's what banks. So a bank is a financial intermediary between savers of funds and borrowers of funds. And what their main function is to take money from savers of funds and rechannel it to borrowers of funds at
Come
an
again with
interest.
your definition. A bank is what?
A bank is a financial intermediary between savers and borrowers of funds.
Mhm.
Okay.
This one is business finance. I'm teaching you business finance. When you get to business finance, you know this already, but I will not go deep. Now, banks operate three types of accounts. The first one is called a savings account. The second one is called a fixed deposit account. And the last one is a current account. Now, a savings account. Please, what is a savings account? I believe you guys know what a savings account is. So what is a savings
Yeah.
account? Everybody has a savings
Yes, of course.
account. Mhm.
So that's where you keep your money. Waiting.
You are right. If you say savings account is where you save your money, you are right because the name suggests that it's a savings. But the reason why you are right, but I'll not give even one, is that fixed deposit too is savings. So what differentiates savings from fixed deposit? So you can see that fixed deposits has the word fixed. Now,
Hmm.
savings account. This is an account whereby depositors are allowed to save their monies for a period of time and withdrawal can be made immediately. Immediate,
Hmm.
immediate, okay,
Anytime.
anytime. But they should give a prior notice to the bank. Okay, prior notice to the bank. That's a savings account. So you see, Susu, those microfinance, they mostly operate a savings account. So when you create a savings account with them, They can give you your money anytime you want, but just that you have to notify them that, oh, you need the money. Give you maybe some days that will get your money to you. But it shouldn't be even more than. Did you understand? That's the savings account. Now we fixed deposit account. As the name suggests, fixed. It's a deposit whose timing is fixed. So the maturity of the fund is beyond a particular period, and you receive the full amount when it is matured. I don't know whether you understand what I said.
We
Fixed
do.
deposit,
Yeah.
it is it's like an agreement. So you go to the bank, you put your money there, you tell them that, okay, I'm taking this money in the next 8 years. So it will grow, the money will grow. So you can only touch that money when the 8 years is up, when it matures. That's when you can touch the money. So yeah, both of them gives interest because I told you that they will give you money interest on your amount you've saved, right? But just that with the savings, the interest are smaller. The interest amount is small. But the fixed deposit, they are a bit higher than the savings. They are higher. But with
Ghana
current
here is
account,
30%.
no interest. Unless maybe your
Wow.
money is rather there plenty, that even the interest they'll give you is not significant. It's not significant.
But withdrawal anytime.
Yes. However, current account you can withdraw without even any notice. Withdrawal is instantaneous. Instantaneous. Please you understand? And even a current account, they will issue you a checkbook.
Yeah.
Okay. Now, bank reconciliation statement, where the main issue is when the bank has clients that are current account holders. That's where the issue is. Current account. Because those people they can withdraw anytime, they can write check at any time, even if they don't have money in the account, they will be writing checks. They can even order the bank to make payments on their behalf. And because the bank is operating such an account for them, the bank will be deducting them some amount of money. And all these things would make the bank book balance, sorry, the bank statement balance and the cash book balance not to agree. So we are learning reasons why the bank statements. You know bank statements? Okay, I'll explain what a bank statement is. But I believe you guys know about cash book.
Yes.
The bank statement balance and the cash book balance do not agree. All these things you were supposed to watch it in the video. One, bank charges. Now, since the bank is operating a current account for you, they will be charging you some amount of money. And all these amounts of money, you wouldn't know until you receive the bank statement, right? Sometimes these monies they have 7 cities, 5 cities, 3 cities. All those charges, cleaning, then you didn't see it until you receive the bank statement. So when you do that, when you receive the bank statement, you would have to add all and subtract it from your cash book because it has understated. Sorry, yeah, because it has already been deducted from your bank balance, so you would have to subtract it from your cash book. Please, you understand? So this one too can make your bank accounts, sorry, your bank statements and the cash book not to agree. Second one is a standing order. Now, standing, when we say an order is standing, it means that the order is still valid, it's still authorized. So this is when the account holder, the current account holder, authorizes the bank to make periodic payments on its behalf. So maybe the current account holder has some workers that maybe they are working for him elsewhere. So he can't be just writing checks for them every month. So he will tell the bank, okay, every month send 2,000 Ghana cedis each to these persons. So it's an agreement to the bank, authorizing the bank to make payments on the behalf of the current account holder. That's a standing order. So until terminated, it still becomes standing. And that's, or with that, the bank will be making those payments. So for instance, if maybe a client or sorry, one of the employees stops the work, if you don't instruct the bank to stop making those payments, the bank will still be making those payments. And such orders would also reduce your bank statement balance, whereby your cash book balance will be overstated. Please, do you understand?
Yes.
Good. So when you get to know that it is a standing order, you should also subtract it from your cash book balance. Even if the person has terminated his contract, you still have to subtract it. You can't tell the bank to refund the money because you didn't write to the bank that you should stop making the payment to that person. So you have to rather subtract it from your cash book balance. Then you can take the person on a legal issue that, oh, you didn't work for that money. Accrual concept. Money that you've not worked for. So give me back my money. Please, you understand? Yes.
Yes.
So that one is a legal issue that you can take the person. Three, then come. This annual checks. Hey, let me try. Now, this annual checks, this is when you maybe you write a check to a supplier. Maybe someone supplies goods to you. You have to make payments. So you write a check to the person. The very moment you write the check to the person, you credit your cash book, isn't it? Because payment is going out. I told you that when payment is going out, this is your cash book. Let's assume this is a cash book. Let's say this is the bank column. Okay. We are not dealing with cash. We are just dealing with bank. In BRS, we are just dealing with bank, not cash. So this is our cash book and this is our bank statement. This is how a bank statement looks like. I believe you've seen it before. It has debits, credits, and balance. This is a bank statement. So now this is particulars and maybe here will be dates. Now let's say you paid a supplier. So supplier, if you are making payment, this side is for payments. This side is for receipt. Okay, so you paid a supplier less than 2K. Now, you've credited your cash book 2K. The supplier sent the check to the bank. So if the bank receives it, now please listen to this. Banks, when they are crediting you, it means they are increasing your account. When they are debiting you, it means they are reducing your account. I know you guys are very aware of banks, how they do their things. So if you say if a banker tells you I've credited your account, it means what is cannot to account or will increase your account balance. If a banker tells you that I've credited your account, it means the banker has increased your account balance. But if the banker tells you I've debited your account, it means debited. It means the banker has rather reduced your account balance. Now, in accounting, when we are increasing our account balance with debits, when we are rather decreasing it for assets with credits.
Debit the giver and credit the receiver. No, credit the giver.
Debit the
Credit
receiver,
the
credit
giver.
the giver.
Yeah, credit the giver and debit the receiver.
So if you are receiving cash, it means cash is increasing, isn't it? So you
Yes.
debit the receiver, which is cash, yeah, and you credit the giver, isn't it?
Yeah.
So you debit the receiver, credit, I've written the credit the giver. Please you understand? That's the double entry that we will use. Now, so since we are paying a supplier, we credit the suppliers our cash book because cash is going out. So if the supplier presents it, like the bank will record it, maybe the supplier, okay, maybe 2,000. Let's assume our balance is, let's say, 10,000. So like the bank will record the 2,000, let's say balance. Let's say the balance is 10,000, okay. So like the closing balance here, we add the 8,000 difference to it, we get 10,000. So that here to be 10,000. Then this carry down will come as a brought forward 8,000. Okay. Now, this is what we will know. But you can see that when the person submitted the check, it was dishonored by the bank. So the bank cancelled it. They cancelled it. So like this amount was to reduce the balance to maybe 8,000. But because the bank cancelled it, the balance will still be what? 10,000. And we write this honored check. Please you understand? So if you see such a thing, it means that that check has been rejected. So you too, you have to correct your cash book. So if it is a supplier that you made payment to, it means that this payment was never credited by the bank. Or sorry, debited by the bank. So you shouldn't have even credited your cash book. So that dishonored check, you should recognize it on the debit side of your adjusted cash book, 2,000, so that this 2,000 will cancel this, then the balance will come back to 10,000. Please, you understand what I'm saying?
Please come again.
I'm saying that because the check was dishonored, even we shouldn't have done it here. Because you let me write the 8,000 still. Because the check has been dishonored by the bank, so we create our adjusted cash book. I'm teaching you how to correct it. Okay, so adjusted cash book. Okay, so you bring the balance as per cash book. Okay, so it's 8,000, right? 8,000. Now you know that we made a payment to a supplier. This is the payment. We've made it already. And the bank said it is a check, that check has been dishonored. So we have to bring the payment back. So we can't cancel it. We've already written it in our books. So we will do that in the adjusted cash book by saying dishonored check 2,000. So when we add it, you know this side is zero. Okay, there is nothing here.
Oh, oh, hello.
Hello, I'm listening.
Hello. I said the dishonored check doesn't mean the check has not been accepted, or
Yes, the check
I
has
want
been
to understand.
rejected by
Bounce check.
by the bank.
Maybe the one who bought the items with the check, the buyer. Maybe there's no money in the account.
Okay.
Mm. So once the check has been rejected, is this dishonored check?
Okay.
Please, there are many incidents where that a check will be dishonored. There are
Yes,
plenty.
if the bank call the how do I call it, the account holder of that particular check, and
Mm,
you fail to answer, they can dishonor it.
okay. Yeah.
Paul, I'm done.
Good. So that dishonored check will add up to the existing balance to make 10,000. Now there is nothing here. So when we close it, you see we come back to 10,000. So therefore our balance, so I'm taking it over again. Unpresented checks are checks that the current account holder writes to suppliers for them to present it to the bank. Now, when the suppliers present it to the bank, the bank will debit the current the account. Okay, and that will reduce the account balance. Okay, so such errors, such checks, you see, the very moment you write it to the suppliers, you credit your cash book. You write it like the way I've written supplier 2,000. So you've written it to the supplier, but the supplier is still in possession of the check. Okay, the check has not reached the bank. Let's say this
Maybe
is
he
the
has
bank.
forgotten.
The check has not reached the bank, so he's yet to present it to the bank. And when he presents it to the bank will reduce your indebtedness. Sorry, the bank will reduce your account balance. But since he's yet to present it to the bank will not be aware of it. So these errors that I'm talking about, the bank is not aware of them. We call them unpresented checks. Please, you understand?
Yes, please.
Okay. Now,
Senna, you are awake.
Yes.
okay.
Sister.
Okay. So
Yo,
uncredited checks. I'm done with unpresented checks. With uncredited checks too. Suppliers wrote, sorry, this time customers. You see, customers. Customers too can write checks to you. Okay. So customers. They wrote checks and they gave it to you. You took it to the bank. So the bank has a check. But the bank has not credited your account yet. Please you understand?
Yes.
You took it to the bank. That the bank should credit your account. They should put it in your account so that your account balance will increase. But the bank has not done it. The bank is yet to do it. That's an uncredited check. So with such an incident, you know that it will understate your cash account balance. Your bank account balance. So that one too, you would have to write to the bank. Oh, please, this check that I presented to you, you guys have not credited it. The one presented to, oh, I wrote some checks to suppliers, but they are yet to present it. So when they present it, this is what my account balance will look like. So all these two transactions that I've ticked, we treat them in the bank reconciliation statement with the wrong debits and the wrong credits too. They will all go into the bank reconciliation statement. But let me explain the wrong debits. So a wrong debit is you are there now, you see that you see that the bank has debited your account wrongly. When we say the bank has debited your account wrongly, it's like we escape
Taking
your
money
account,
from your account. Yeah.
like taking money from your account wrongly. You've not done anything. It's not your transaction. But you see, sometimes some of the clients of the banks can have similar names. So maybe the bank thinks that, oh, he's taking it from Kofi Kofi. No, he has taken it from Kofi Kofi. Please, you understand?
Kofi Kofi, sometimes I don't even get the banks. They all have the unique number, which is the account
Account
numbers.
number.
So why would you make that mistake? Sometimes I don't even get them.
I understand.
Because you
But
are supposed to be dealing with the numbers, not the names.
yeah, but you see, the person too there is not an IT person, he's a business person. On what the Dino check. Even though he has to cross check with the name and I guess what you're saying, your name and your ID. But you see, these are the human beings. Definitely they will make mistakes. Technical mistakes are bound to happen. Because our bread is working, he has been sitting maybe from morning to 5. He's tired and you can make a mistake. Simple. Where you not know. Me, for instance, when I'm tired and I can make mistakes. But that doesn't mean I didn't do it maybe diligently. No. It's because maybe you are tired. Okay. So all these things can happen. Wrong debit is when the person wrongly debits your account. So you go and tell him, hey, massa. Scatter away. You weren't supposed to take that money. So please do your best and put it back. So mostly wrong debit, we treat it as uncredited checks. They will have to credit your account to reinstate the balance. Please, you understand? So they treat it like uncredited checks. So we add it to the uncredited checks. And also wrong credits. Wrong credit is, oh wow, you two you are there now. Then an amount of money will come into your account that you don't know anything of it. So you go to the bank and be like, oh boss, this money there is like you are giving me a Christmas gift. And they'll be like, oh no, it's not a Christmas gift. And you'll be like, oh then please, I don't want any problem. Take your money. Okay. So that's also a wrong credit, and that one to be treated in like an unpresented checks, because you know unpresented checks, when they present it to the bank would debit your account. So since they've credited your account wrongly, they would have to debit it so that it will cancel off. Please, you understand?
Yes.
Oh, thank God. You guys understand. Let's go to the question. We have 9 minutes more. Let's see what we can. Now, please pay attention. Jasco. The following is an extract from the books of Jasco. That is the cash book. You see the road bank column. Good. So these are transactions that went on April
April
2008.
1st, April 8th, yeah.
So you can see all the transactions.
April
The
1st.
credit side is transactions that came into the account. It means that the credits. This side is credits. This side. This side is credits. I believe you can see it. And this
Ah,
side is debits.
so for the cash book, the left side is credit and the right side is debit.
Yes, please. Hey, sorry, this side is debit. Sorry. Hey, you see, I'm
I'm
tired.
confused.
I'm tired. Yeah.
Yeah, I can see.
Ah.
I can see.
This side is debit. This side is debit. This side is credit. This side is the
Credit.
receipt. The receipt. Okay, the debit side is the
Yes.
receipt. And the credit side is the payment. See, I spoke of technical error. I've done some right. Jasco.
It's
Is it
normal.
Josco or Jasco? Josco. I'm
It's
very
just
tired. After invigilating,
Just
you said? Josco.
just to-
Good. Now look at the transactions. Please, this one there, you people should take your phone as look like more. You guys should follow keen because we have to cross check. And myself, I'm not seeing it all. Take your phone. I'm just presenting this one, so you guys should go to the next page and look at the bank statements. Okay.
next page. I have the paper here, so
Okay. Take your papers. Take your papers. You people
We
have.
have it too. So, yeah.
Okay. So look at. You can see that on the 1st April, the balance here is the same as the one on the 1st of April for the bank statement. This is the bank statement.
yes, 9,900.
And
Yes.
this
It's the
one too
same.
is credit, right? You can
Yes,
see they've written credit, but here they've
Mm.
written what? Yeah, it's at the debit side. They've not written, but it's at the debit side. You can see it. Because I told you
yes,
that,
at the debit side, yes,
yes, I told you that
Yes.
in the
Yes.
to we accountants, when we are increasing our cash, we debit. So this
yes,
debit balance is showing that we have cash of 9,900 in our bank account. Now, the one here too is showing that we have the credit. It's showing that we have
Credit.
cash of 9,900 in our bank account.
because it's showing at the balance column.
Yes, and it is credit. If it was debit, it means we owe.
Mm.
Yes, but they've even
Mm.
written it beside it, credit.
Mm-hmm.
But I think we have debits, credits, and then balance.
Yes, debit, credit, and balance. But you see, if you look at the first one, 1st April, it is balance brought down.
Okay. Okay.
It is balance
Mm.
brought down. So
So
it's
it means that
credit.
that balance is coming from March.
from the following the previous month.
Yes.
Okay. Yeah.
Now, please go into the bank statement. No. Okay. So before you start, take oh take first of all prepare your adjusted cash book first. Okay. So adjusted cash
That
book.
should be the first one.
Yes, yes. Adjusted cash book. So their currency signs will come. Now take the balance as per your cash book. So your closing balance from the cash, the closing balance was what? 12,700, right?
700. Yeah.
Yeah.
So it will come 12,700. Now go into your bank statement. Now look at the naming. You can see bank charge. How much is it? Bank charges 800, right?
800.
Good. And I told you that bank charges is what? Payments that you've instructed the bank to make on your behalf. Sorry, bank charges is like a payment that the bank deducts from your account
Pay-
because the
Payment
bank.
payment of things you've made the bank do
No,
for
no,
you.
no. Bank charges,
Charges, right?
they are the charges the bank takes from your account.
Yeah.
You
Yes.
see, you have
So
an
for
account
instance,
with them, so they are keeping
yes,
your money for you. So they have to take some of the money as
yes,
charges.
that is the
So it's
COT.
like interest.
Yes, yes, like
No,
service
no, no,
fees.
no, no, no interest. COTs, yes. Sometimes they put all these things under COT, internet, how do you call it? This email charges,
Yes,
um,
Yeah.
all
uh,
those service
ATM
fees.
those
charges.
they
Yeah,
have,
all those things. What they use.
SMS charges,
Me
ATM
say
charges,
one
all those
one
ones
bank
are
be every day,
COTs.
every day. Me, I'm not using the ATM card. Me know they have that guy. Oh yeah, they are tearing me 7 cities every month.
But I think with savings they charge like
No,
the
no, no,
interest.
no. Savings are
No, savings they don't.
savings. They
Mm.
don't give you
They
those.
don't. They won't give
Yo,
you.
the only way they will charge you savings is when you take a Mastercard. Like what I did.
Mm.
I went to take an ATM card for instantaneous withdrawal, and every
Okay.
month they are charging me 7, but I have not used it, sir. Please you
Okay.
understand?
Yes.
Mm.
Yes.
So savings there they don't charge unless maybe you try to let your savings account look like a current
Mm.
account, and that's when they charge. So this bank charges first, don't just record it straight. Go and check whether it has been recorded already. So the 800, you check from the cash book. Has it been recorded? You see, there is no 800. So straight, since there is no 800,
Mhm.
you go into your cash. You know that it's a bank charge. They've deducted it from your bank balance, right? So it means
Mhm.
that it should be subtracted also from your cash book. And I told you that this side is payment side. So anytime anything that you credit here will reduce your bank balance. Please you understand?
Okay.
This is credit, this is debit. So when you credit it, it will reduce this balance. It's a payment, so it means you are paying for the bank charges. 800. Please you understand?
Yes.
Okay. Now you go inside again. See, you can see credit transfer. That's it. 1,040. So go and check whether it was reflected in the cash book. There is nothing there. You can see it on the debits, right?
Yeah, there's nothing here.
So that one too will come. You know that credit transfer, I told you that a customer like that transferred monies from his account straight to your account without your notice. So it has been credited by the bank. Look at it here. The bank has credited it. They has placed it on the credit side and your account balance has increased. But there is no reflection in your cash book. So you have to credit it. You have to debit it. Okay. Credit transfer 1,040. Did you
40.
understand?
But this one doesn't come with dates.
Forget about the date. You see, we are adjusting it. So you can write it, but if you like, don't write it.
Hey, 4.
If you like, don't write it. It's nothing. Well, you should write it. You should write it because the date will verify the transaction. If it was a professional, like a real life something, you can write. But for exam purpose, you can decide not to write. But me, if you think you can, you have more
Oh,
time, you
please,
can
in
write.
an examination, do we have to write the adjusted cash book?
Yes.
Yes, he said that is the
Okay.
first one we should prepare.
Okay.
Yeah.
Okay. Thank you.
And even
But
because he
Paul,
brought,
can you go ahead?
you see, that's why it says as on 30th April 2000. So you can decide the date here. If you want to write the date, maybe for verification purposes, but for exams purposes, you can decide not to write. But if it was a real life event, something, then the dates are important so that they can easily track it. Even for real life events, you write the check number and the check number, the date of plenty things will go inside. Even this is not how we do our reconciliation. We use Excel. It's quite fun, but it's nice. When I went to when I was at the account office, when I was doing reconciliation, I realized that it was different from this one, but that one is quite easier. That one everybody can do. But if you know the basics, if you know the like DRS, what I'm teaching you, can do that one very well. You can do that one very well. They'll just have to show you, okay, when you see it, don't explain, highlight it. If you don't see it, filter them out and put them here. And those ones, they are simple. Please, do you understand?
Yes.
Okay,
But
so
can we still add the date?
yeah, you guys can add it, but me, I'm not adding.
So let's go ahead. But now we know that we will add a date. So
Me, I'm not adding it. Okay,
You.
it's not necessary to bring it. So now, verify verify every transaction one after the other. So on the
but,
9th,
but I'm coming on. Please, a question. The adjusted cash book side, that is the debit and credit. Now, balance brought forward is money that you are crediting yourself, so you debit. I understand in the cash book, when you are debiting, meaning you are increasing your money. When you are crediting, you are decreasing your money, right?
yes, please.
Okay. So now the bank charges, you checked here, and then you check your cash book. There's no bank charges.
It has been
So
debited
now,
here.
The bank charges is 800, right?
Yes, it has
yes.
been debited here.
So why is it on the credit side?
It has
So,
been
so
debited.
I want to explain and see if what I know is right, or
Okay.
what my understanding of it is right. So now, because it has been debited, the account has been debited, right, from the bank or at the bank side in the
Yes.
statement. the bank statement, it has been debited. But when you come to your cash book, because it's a bank charge, you don't know how much they will even charge at that particular time. So you've not credited your side yet, or
Yes.
you've not credited it, because when you check the credit side, it's not showing.
Yes.
So you will have to credit it because it's your cash book. That is why it's showing at the credit side, isn't it?
Yes. That's the first explanation.
Okay, then we come to credit transfer.
Mm-hmm.
Now, credit transfer, does he did the transfer without informing you?
Mm-hmm.
And so when you saw it in the statement, you quickly went to your cash book to see if it has been debited.
Mm-hmm.
But when you check the cash book, Dazi is not showing there. So you need to debit yourself. You need to increase your money.
Mm-hmm.
That is why it's showing at the debit side, isn't it?
Yes, yes, please. That's the best explanation. So,
Okay. Yeah. Thank
please,
you.
I believe you all understand what he said.
No,
Okay.
I'm a little bit confused.
Sarah, be careful.
So
Okay. Should I go back again?
yes, please.
All right. So Sarah, are you listening?
Yes.
Now he's saying that the first now we will have our cash book, right? That is a record we have for ourselves. Then we request our bank statement from the bank. The bank will print, they'll generate the statement and send to us, whether electronically or hard copy. Now, when you pick the bank statement, the first thing is to go through the items one by one. In this case, all started from 30th. And so the first one, the first item on the, how do you call it, the statement, the bank statement is bank charges, which is 800 Ghana cedis.
I
But
started from the
because,
30th. That's the last transaction.
yeah, the 30th.
Yeah, my
So,
problem is why is it on the credit side? The bank
yeah,
charges,
that is
that
what
is
I want to
800.
explain to you. I'm just setting the
Okay.
preamble.
Okay.
So now you've seen bank charges in the statement, which is the last item. Now you need to cross-check from your cash book whether that 800 Ghana cedis has been credited in your cash book. So once you go back to your cash book and you check the credit side, because credit in your cash book means decrease. They are taking money from your account. So you check your cash book, you've not seen that 800, then quickly you will have to deduct that 800 from your cash book by using the adjusted cash book to correct it.
Okay.
Do you get it? So
Okay.
now,
Mr. Douglas,
because the
I think,
adjusted cash
Mr.
book
Douglas,
is also your, yes.
please let me come in here for here. I will let you conclude. But I want you to understand this. Madam Sarah, anytime the bank credits your account, okay, it means that they are increasing your account balance. And also, when we debit our cash book, it means we are increasing. So when they credit, you have to debit in your cash. Do you understand?
Okay.
Yes, and when they debit, you have to credit because when they are debiting, they are decreasing your account. So you have to credit to decrease your account. Please, you understand?
Yes.
Okay, so Mr. Douglas, you can continue.
Okay, thank you. So, Sarah, you see, the adjusted cash book is just like your cash book. But adjusted cash book is to do corrections in your cash book
In your
or
cash
to
book.
your account. Do you understand? So
Yeah.
now when you check the bank charges, it's not appearing in your cash book because you were that amount was supposed to appear in your cash book to decrease your money because they've taken the 800. So since
Okay.
it's not showing there, you need to correct it. But we will use the adjusted cash book to correct it. And by decreasing your money, you need to credit it. That is why the bank charges is showing at the credit side.
Okay.
Is that okay?
Yes, thank you.
All right, don't mention it. And then when you come to credit transfer, Dazi transferred money without informing you, but you are seeing it in your bank statement. So when you check your cash book, it's not showing that Dazi has actually paid you. So what it means is that your cash book's total amount is less than what you have as the real balance from the bank. And so, because in your cash book, if you want to increase your money, you have to debit the credit transfer from Dazi. And that is why the 1,040 is also showing at the debit side.
Okay.
Now I have it here. So now you see 26, there is cash, credits. You see the transaction on 26, cash 1,760, and it's on the credit. So when we go to the debit of the cash, we should see that transaction. Cash 1,760.
760.
Please, have you seen it?
Yes.
Good. So let's check another one. 15th, check 1,080. So when we go to the the debit side, we should see that 15 transaction. 1,080. So it was a check from SG, which is a customer. 1,080. We can see it. So since we've seen it, we don't do anything to it. So you go on the 9th, ASA 940, and it's the
940.
debits. So when we go to the credit of the cash book, we should see ASA 940. Please, can you see it?
Yes.
940. Good.
Yeah.
Now, we are done with the last one, which is check on the 8th, 1,520. So when we go to and it is a credit, okay? So when we go to the debit of the cash book, we should see 1,520, and it is there. 1,520. Please, have you seen it?
1,500. That's Yawedu.
Yes, yeah, we do 1,520, and you can see it here, 1,520. So it means that the transactions that will come into the cash book, we are done. So we balance it off. So we are done.
The transactions that are supposed to come to the adjusted cash book is finished.
Yes,
So
sir.
you have to balance, isn't it?
Yes. So you leave a space at both sides for the balance. Then you ask yourself, which side is greater? Is it the debit or the credit?
The debit side.
So you add the debit. So here you get 13,740,
740.
13,740. Then you find a difference between the debits and the credits. This is what do we get?
I didn't get a question, please.
Said you find a difference between the total that we've gotten, that's the 13,740, and the total for the credits.
Okay, so that's 13,740 minus 800, right?
800.
Yes.
That would be 12940.
So this will come as balance brought down or brought forward. So we are done with the adjusted cash. So since we are done, we prepare our bank reconciliation statement.
Oh,
Oh, okay. So the balance brought down will be the 12,940.
Yes, please. Please, were you writing something?
yes.
I'll go up.
Yes, please.
So right now we are coming to do the statement, right?
Yes, please. Are you done?
Yes, we are done.
Okay.
Yes.
So you write, first of all, you start with the balance. The balance as per adjusted. Is that right?
Hey.
So you start with the balance as per adjusted cash book.
That's good.
Please, you know the amount. Brother of 12,000
Yeah, the
nine.
amount is 12,940.
Good. So that 12,940 will come. Please, then you add unpresented checks. So this question, you see, when we verified the cash book bank statement, we didn't verify the cash book. You see, there were some things we checked everything in the bank statement, but we've not checked the things that are in the cash book that are not in the bank statement. So
Yeah.
unpresented checks, they are payments that we've written to suppliers. So ASA, C Edu, and ECAFU are suppliers. We made payment to them, but it was only ASA that presented that payment to the bank for the bank to credit it. Please you understand. So we have to for the bank to debit it. Sorry. So we have to CADU and ECAFU didn't present it. So we have to record yes as unpresented checks. Please, are you getting what I'm saying? So
Yes.
CADU, CADU and ECAFU. So CADU is 2,120, 2,120, and ECAFU is 820. Okay, so when we add it, please, if there were wrong debits, we could have added it because I told you that wrong debits should be added to, sorry, wrong credits should be added to unpresented checks, wrong credits instead. But this question, there is no wrong credits. So we add these two. Okay, 2,120 plus 820, and we get 2,940. Okay, so we add it to the balance. Okay, we add the 2,940 to the balance, 12,940. Then we get 15,880. Please, do you understand? Then we left uncredited checks. Now, uncredited checks are checks that we have rather received, but the bank didn't record them. So we received checks from Y, ST, and A Owusu, but the bank recorded only that of Y Edu and yes, I think the bank recorded only that of Y Edu. Okay, and that of SG, right? But I'm not seeing A Owusu's amount.
Yeah, also is 2,320. Oh,
Yes, but can you see it on the credit? Can you see it on the credit of the
no,
It's
the
not there.
it's not there.
It's not there.
no,
Yeah.
it's not there.
Yes, so A Owusu's amount, which is the 2,000, that's the only one, right? 320 should be subtracted. Please, when you subtract it, what do you get? That should be equal to the balance as per the bank statement. That's 13,560. And that's what I'm getting as the balance as per bank statement. When you check the question, you can see it's here. 13,560 as the closing balance on the 30th. This have you seen it?
13,000.
So we are done. Any
Sarah,
question?
Sarah,
Yes.
do you know why the 2,320 is in bracket?
In bracket, that's
Yes.
the loss on unpred- unpredicated check.
On which unpredicted?
Yeah.
Uncredited checks.
Uncredited, sorry.
Yes, but why
Yeah.
why is that figure in bracket?
It's because we are deducting it from the
Mm.
take home.
Yes,
Okay,
yes,
that's
yes,
yeah.
yes. Okay, so we are done.